After months of record-setting price growth in the condo market here in Calgary, we're finally starting to see a shift. Now, is this a correction or a crash, or is the market just stabilizing across the city? Now, home prices in Calgary are now worth $323,000, down almost 7% from the peaks that we saw in August of 2024. Down $36 from last month and down $22,000 from last year. Now, we got to dive into it. My name's Adam Fyfe, your Calgary real estate agent. If you're looking at getting into the market, now is definitely the time to do as much research as you can, because there is so much different information out there that is very important that you find the right information that's going to best reflect your personal situation. You want to know what your home is valued at? Go ahead and use the AI link tool in the description. It will give you an instant momentaneous value. It helps a lot of people go through the process of figuring out what the ebbs and flows of this market is actually doing in their specific condo building. Super interesting stuff. So let's go ahead and read what the Calgary Real Estate Board has written about the apartment market. If you want to read it on your own, that's fine. Pause and go to the next chapter. The most significant adjustment in the market occurred in the apartment condominium sector as improving rental supply, delayed adjustments in interest rates, and improved selection for other property types has slowed apartment-style demand from both first-time home buyers and investors. September reported 401 sales and 924 new listings, dropping the sales to new listing ratio to 43%, causing the inventory to rise to 2,000 units. By the way, this is my puppy. His name is Louie. You're famous now. The rise in supply caused the months of supply to push up to 5 months, the first time it has done that since 2021. As elevated levels of supply have persisted since June, prices have been trending down. As of September, the benchmark price was $323,000, down 1% compared to last month and over 6% compared to last year. The year-to-date price adjustments has been just over 1%. Condo prices have slid across all districts compared to last September. The largest declines occurred in the Northeast District at over 10%, while the smallest decline occurred in the city center at 5%, which is pretty crazy because you would think that the city center would see some of the biggest drops just because it has the biggest amount of apartments available. So let's go ahead and start to break these charts down, right? So we can see here that the red bar is the price point, and that's a pretty steady downwards trend in price. Yes, it is a pullback. It is not a correction. It is not a crash. It's a pullback. Over the last 12 months, we've seen, about 5% decline, and it's been pretty steady. It hasn't dropped significantly. You can see the sales have been relatively dipping down, right? In the spring months of the year, we usually see the most amount of sales, and then it naturally goes lower and lower. You can see that the inventory has also stayed relatively stable, right? We did see a dip in September and now a small increase in September. So this tells me that the market is stabilizing more than it is crashing or correcting at this time, right? This is only September. We're in October now. This is a natural market cycle that we see every single year. The issue that we have is we're going from an ultra hot seller's market in the apartment sector, which we haven't seen in many years, to now seeing consistent declines. So the market is now starting to stabilize. So when you start to look at and break it down, here's the sales, the year-to-date sales numbers, okay? One of the things you'll notice on this chart today is the price points that I've added, and I'm going to do this for every property type this month. So you can see that, yes, we have dropped in terms of year-to-date sales, right? Last year, we were at $345,000 for the benchmark attributes in September of 2024. Now we're at $322,000. But look at where we were. Right? The benchmark attributes in 2016 to 2020, 259, 232, very low, right? $100,000 less than what it was now 6 years ago, right? 5 years ago in 2020. So yes, we did see a crazy run up of 236, 263, and then we jumped like $40,000 to 303, jumped another $40,000 to 345. Now we're starting to stabilize, trying to find that new balance, right? Are we going to dip down to the 200s? There's a possibility of that. I wouldn't put it past Calgary to see them drop all the way back down to 280 or 290 for the benchmark attributes. But how long is that going to take? If we're going to consistently see the dips, then it might not take too long, but it's not going to be a dramatic drop, at least from my personal view. So when we start to break it down, we can start to see this is the price point of those sales. Again, in 2022 and 2023, you could see just the sheer amount of sales under 300,000. Now that's started to shift, right? Now it's a kind of a nice mixed blend between under 300s and $300,000 price points. You can still see that there are some sales in the higher price ranges here, but few and far between. So new listings, this is where I think we need to put a lot of or more focus on than other stuff, just because if the sales are dropping and the new listings are going to continue to increase, obviously we're going to see more price corrections, right? So you can see it's been a pretty consistent upwards trend of new listings. We had a lot of people that were stuck in this weird time between 2013, 14. The market was going down, right? We were seeing some consistent price reductions going all the way down to 232. Then the boom happened, right? A lot of people came here. Our net migration increased at dramatic rates. And a lot of people finally started to be comfortable to offload those investments, offload those properties, because we got back to those 2014 levels. But we had enough sales to offset that, actually increasing it, the price points, like we even saw, like $60,000 in 1 year. Now we're starting to see more and more people start to offload their properties as they bought the homes at the lower interest rates. Now we're starting to see a lot of those renewals come to the market. I would imagine we're going to see more new listings come to the market and a more of a balanced style sales activity. I don't think the sales are going to drop off dramatically, but I think we're going to notice new listings continue, which is going to continue to put pressure on inventory and prices. So let's continue on here. Now, this is an interesting one because I just want to kind of go over that, right? This is the expired listings. Now, you can see over the last little while, we have seen more expired listings come to the market. We had 250 listings. I don't know the actual month of that. I would imagine it's probably around this time of last year. 250 units in 1 month were expired, meaning that they were pulled off the market. They didn't actually sell. They weren't terminated. They were withdrawn. They were expired. They went through their whole duration of their 90 days basically on the market. Then it was removed. You can see that in 2020, probably roughly around the same time, you can see Q4, the max that we had was 300. It's pretty common to see those higher numbers at this time. But we also need to put in consideration that it does not include the withdrawn or the terminated. So you can see there's an additional 291 units withdrawn and terminated over the last 30 days. So this isn't just September. Now we're starting inching into October. But you can see that there was an additional 293. You can see just days on market, 7 days, 9 days, 17 days, 16 days, 25 days, 5 days. This is more where the people are testing and seeing if the market is willing to accept their price point relatively quick. I've done this before with clients where they want to go on the market, they want to see, what the activity's like. They go on for 2-3 weeks, they get no showings or very little showings, and they say, you know what, I'm just going to pull it off, maybe we'll wait till next year. That's something that we also need to put in the equation instead of just looking at the expireds, but considering how the withdrawn and terminateds are affecting the market, right? Testing that market. So if we go here, we look at the expired listings going all the way back to 2006. We are not out, like this is fairly normal. This is common for us to see, right? Again, these are more depressed years, but you can see, we got to the 300 price points. You can see the lines here are the Januaries, right? To my understanding. You can see January, and then these are most likely going to be in those fourth quarters of the year, because typically a lot of people will just expire it, they'll put it on the end of the summer, let it expire going into the Christmas holidays. But what I'm getting at is just how common this actually is for a market. If we start to go up to the 2007 and 8 levels, obviously that's a different conversation. But if we stay within this level, then there's really nothing too crazy to talk about on that. It's just common to see in our market. So obviously, we're seeing the market slow down, and we're seeing the trend increase for the months of supply for the condo market, right? We're starting to see some adjustments. We hit a ceiling there for about a year, right? We saw, around 3.5, 4 months of supply, but now we broke through that ceiling, going upwards of 6 months of supply for the apartment market. And I would imagine we're probably going to see that somewhat increase as we go into the winter months, right? It would be interesting to see if more new listings come on the market in October, November, if a lot of people just start trying to dump them on the market, which is going to increase that months of supply, or if people are going to be smart, they kind of hold off for the winter and go into the spring market where they actually might get a little bit more activity and then Q4 of 2025. Now, when we look at this is similar information, right, of what's happened over the last year, but the biggest thing I like to look at here is a days on market, right? Last year, again, seller's market, we were at, on average, the entire city was 33 days. That was kind of the average that it was going to take to sell your home and, take over that closing. Now it's 52, right? It's even more than what it was in the winter months of last year. Even looking back at January, right? It was a super hot seller's market. Now we're starting to see some shifts, right? You can see that the benchmark price is 322, the median price is 318, and the average price is actually 349. So what that tells me is that the higher end condo units are actually what is driving down that benchmark price, because the average price is a little bit higher than that. So when we look at this here, days on market to sell, right? So again, we're looking at this 52 days on market. We're looking at this chart here. If I go back here, you can see again, we're still below long-term trends, right? If we just go like this right across, right? we're still below long-term trends. Yes, of course, we can continue to increase going into 2025, but at this exact moment, we are more in a balanced buyer market, right? The buyer has more power than the seller at this point, but it's still fairly balanced out. It's nothing too dramatic at this moment, right? Are we going to increase to see those days on market? Are we going to increase to see those price reductions? You know, you could be optimistic or you can be bearish or bullish, right? This is depending on what your outview is on Calgary. I would imagine that we're probably going to continue to see some price declines going through the Calgary market all throughout 2025 or 2026 now, just because a lot of investment actually came to Calgary, and a lot of those investors are seeing some increases of those properties when they paid for them in 2021, 2022. The renewals are coming up. We're probably going to see a pretty large dump of inventory, plus a lot of construction that's going on in Calgary as well, a lot of new apartment units coming, which is going to increase the inventory as well. Now we're looking at the months of supply, right? So this is, again, just an indicator as to how fast the markets are moving. And you can see that the northeast and northeast and east are seeing the highest amounts of months of supply, you know, inching up to 9 months, which is crazy. That is absolutely a buyer's market in the northeast east districts. So again, if you're a buyer in those districts, take your time, look for the right product, try to negotiate strong, find a good deal. If you're a seller in those markets, really make sure you're doing your research, you're looking at what's going on with price points in those areas and making sure that you're going on there competitively. Now, opposite, southeast, right? 3 months. That's still a, balanced seller's territory. Southeast, you've got a lot of new development going on there. There's a lot of attraction going on there. You've got hospitals down there. You got future transit going down there. It still seems to be a pretty attractive market for some people. So again, buyers, you might not have the same abilities as you would in Northeast. You might have to act a little quicker. You might not get the deals that you could in Northeast. And the same with the sellers is you might be able to get away with a little bit more. You might be able to put your price up a little bit higher than some other units and test that market and figure out what's going on in your building and what kind of attributes you have. Everything else is still, it's definitely buyers balanced territory for the remainder of the quadrants. Cool? Cool. Now, if we look at price points, obviously throughout the entire city, apartments are seeing the biggest amount of price declines, which is pretty common for the roller coasters, the apartment roller coaster in Calgary. We see this a lot. We see ups, we see downs. This is probably going to stick a trend for a little while. I would imagine we're probably going to see the year-over-year percentages lower. I don't think they're going to stay in these near double digits as we continue to have that progressive downward shift. But we are seeing price declines consistently, even in the southeast that is a buyer or a balanced seller's territory, still seeing 8% year-over-year loss, right? So with that in mind, you want to know what's going on in the market, go ahead and click on the Auto AI valuation tool, super slick. If you're in the market, you want to know what's going on with your investment property, you can reach out to me directly and figure out exactly what is going on in your area. Or if you're looking to purchase a condo unit, reach out, book a call. The Zoom link is in the description. It's a Calendly link. You can go and you can just book in a call directly with me, have a conversation. I promise, pretty easy to talk to. Now, with that in mind, let's go and look at the actual numerical values of what's going on across the city. So this is apartments. You can see that the sales to new listing ratios are low, right? You can see that the Northeast, 29%, only 20 sales in all of Northeast and 68 new listings. Obviously, you're going to see some pretty large declines going throughout the Q4 and Q1 of 2025-26. You can see that everything else is averaging around that 4 months of supply, right? You can see that the benchmark price is here. Again, you want to know what those actual attributes are. The link's in the description. You can go and figure out what the attributes are of the actual price points in this graph here. Year over year, we're starting to see some double digits, which is not surprising to me. I figured that the apartment market was going to see those double digits. You can see somewhat of a flat line in some areas, right? You can see Northeast, even though they have 28% sales in new listing, they actually saw a flat line compared to last year, right? Other markets, right? You can see 61, 5,000, 44, 2,000. Again, East actually saw just a flat line of what's going on. Northeast is a super interesting aspect to this because month prior, $8,600 loss month over month. This month, flatline $800 increase, but the price point is surprisingly staying steady considering there's very few sales. I think this is a lagging indicator that we're probably going to see some pretty sizable decreases in the Northeast, probably November, December, January, if this trend stays, right? Because you look at other properties here where they have a lower months of supply and a higher listing or sales and listing ratios, and they're actually seeing, you know, fairly sizable decreases in their markets. Now, with that being said, opposite of what's happening in the detached market, you can see a consistent increase in the year-over-year percentage loss, right? The single-family market is actually flatlined around 4%, so it's at that consistent price decline. This is consistently increasing every month from the last year's highs that we saw. So we're seeing larger percentages, month-over-month losses. Where are we going to flatline? Where are we going to see that leveling out where it's going to be more of a consistent price drop rather than a dramatic price drop, right? This is the most aggressive price falls in the entire city for property type, right? And if we look here, again, we kind of see that price point in 2020, 2021. We saw an increase 22, a massive increase in 23. We saw an increase and then a settling down in the end of the year. People thought, and myself included, I thought it was going to be more of a flat year, right? I'll be honest with that. I thought it was going to be a little bit more of a flat, small declines, but we are seeing a pretty aggressive price decline. You can see it's fairly consistent throughout the last 2 years. And it's going into Q4, Q1. We're probably going to continue to see that. Where are we going to see it balanced out, right? Because it is still pullback territory. We're not in correction territory. We're not in crash territory. We're in pullback territory. And it'll be interesting to see how long it takes before we start to see that new balance. If we continue to see months of supply of like 6-8 months, it's going to continue to fall, right? If we start to see more of like that southeast, 3-4 months, it's probably going to flatline over the next couple of months as that starts to level out. But we'll have to wait and see. Now, I'm just going to skip that. So with that in mind, that's your apartment condo update. Now, it's not too long, but what I really want to get at with condo apartments is it's so hard to try and blanket statement condos because there's different amenities, there's different features, there's different walkability, there's different condo fees, and every single building is different, right? 2 buildings on the same block will go for 2 different prices because they have different amenities, different condo fees, different attributes about those buildings. So if you are serious about the apartment market, buyer, seller, investor, homeowner, whatever, it is so important to figure out what is specifically going on in your building, in your community, and yeah, of course, looking at your quadrant, but really diving into the numbers as to what is happening within your personal area. So with that in mind, if you have any questions, go ahead, reach out. I promise I'm pretty easy to talk to, and that's all I got for you. We'll see you on the next one. Peace.